Hello to my viewers. This is your host, Nick Orlando, and I'm with the Nick Alonzo Real Estate Group. And you've tuned in to episode 2, and I'm here today with my guest, Mr. Josh Howard with CMG. Josh, how you doing today, brother?
I'm doing good. Thanks for
Good.
having me, Nick.
Thanks for coming. I really appreciate your time. I know you guys are busy, and you guys are doing a lot of loans for a lot of great buyers out there.
Sure.
And I'm sure it's great for my viewers to hear from one of our in-house lenders who've been in the game for a long time. That's an expert. So quite a few questions for you today to kind of help our buyers out there, especially first-time home buyers. And I know you've got a wealth of knowledge out there. So let's just start off for our viewers. How did you become a loan officer?
So prior to getting in real estate and the mortgage business, worked in project management in the engineering field, working with a lot of companies and consulting and things like that. So 12 years of doing that. About 7 years ago is when I made the switch over into real estate and mortgage. So I just found that I like working with people, right?
Right.
Real estate's always been like a passion area for me.
Yeah.
So yeah, it's been.
And being an engineer, you guys worked with numbers all day. So I'm assuming it was a pretty good transition, just working two different type of numbers, I'm assuming.
Yeah, exactly. Absolutely.
Yeah.
And I was all, being in project management, like, you're working budgets and everything. So you're always,
Yeah.
finding the best kind of, solution and things like that. And I was just able to kind of take a lot of those skills and being a project manager, you're constantly solving problems too. Right.
Right.
And so, each buyer has their own set of, different circumstances. Everybody's different and unique. And so I just love being able to apply those, skills and everything and a very personalized
Right.
touch with it. So,
Which is a really good skill set to have, especially for someone that's buying a home. They need someone to problem solve. And I talked about this on episode 1 is our buyers sometimes, especially first time home buyers, they have no idea how troublesome the process can be sometimes. And it's not always their fault, just not knowing how it works.
right.
And having a good LO in your corner really kind of solves that problem. So that's good to go. How many years have you been in as a loan officer?
Going on 7 years now.
7 years?
hmm
Okay.
Yep.
And in your 7 years, um, were you with CMG the whole time, or did you kinda
Yeah, no. So I started out with Sierra Pacific Mortgage.
okay,
So very similar business type to CMG.
okay,
But yeah, I've always, worked with a lot of first time home buyers, a lot of repeat
right,
buyers as well. And even, investors as well. So yeah.
awesome. So it seems like CMG was the home that you needed to be. Talk about the
Yep.
kind of programs that CMG has, and what do they offer to these buyers out there?
Yeah. So it's important to have options, right?
Yeah,
Just because each home buyer is unique and different, right? So I mean, we offer the conventional loans, FHA loans, that kind of a thing. But we also we're able to do all the down payment assistance
mm,
programs that are out there for first-time home buyers. We work with a lot of the local entities that have grants available.
nice,
Since we're local, right here
right,
to Northern California, we're able to just really know those programs inside and out. And then we just have a lot of other, I would say, like incentive type programs to help people out with just, saving money now, but also in the future
okay.
as well.
Can you talk about a couple of those incentives that you guys offer to buyers that use your guys' program specifically
Yeah.
for CMG?
Yeah. So the biggest one I would say is our rate rebound. And
Right,
what that is when someone purchases with us, and it doesn't matter if you're a first time home buyer, repeat investor, um, you're going to get a basically a certificate that allows you to do no cost refinances for 5 years.
wow,
All you got to do is wait 6 months in between. But
right,
if those rates drop and improve,
right.
you're going to be able to come back. We waive the fees that are typically involved with a refinance, saves them $3,500 a
Yeah,
rate.
and I think people don't realize this, and
Mhm.
this is coming from a seasoned home buyer, I guess. I'm 38 years old. I've bought
Yeah,
quite a few different homes,
right.
but the first time that I've ever refinanced, right, not being in real estate, not understanding the industry,
Yeah,
not knowing that they say, oh, it's not going to cost you anything, but it's really tacked on to the principal. So every time you
correct.
refinance, it's an extra cost that's tacked on to your principal. So you can refinance 2 or 3 times, get that lower monthly mortgage, but your principal is increasing.
That
Correct?
that's the normal.
Right, that's
Yeah,
normal, but with your
yep.
guys' program,
We
if
waive those fees.
Waive those
and it
fees.
works out to $3,500 in savings. So
Wow.
instead of, you know, upping what you owe
Right.
each time you refinance, you're just going to be able to roll right over
Right.
and get the lower rate
So
and
it's in their
start
best
saving
interest to
money.
go with CMG.
Oh, for sure. It's a huge, huge
Right.
savings.
Yeah.
Absolutely. And, we have some other, like we have, it's a proprietary gift fund
Mm,
platform. Um, it's basically crowdfunding for your down payment.
really?
Okay. Yeah. So basically, anyone, the buyer will set up this, it's called Home Fund It.
Okay.
They'll set up the account, and all they have to do is just provide the link to anyone. It can be friends, family, somebody's getting married, somebody's going to school, and they want to, set up for like a graduation gift type
Right.
thing. Um,
So instead of having a housewarming party, they can have a housewarming gift fund
exactly.
program, and then just help them buy into their house or whatever they need
Yeah.
to buy their okay. And
Yeah.
you can use that to buy their rates down and things like that as well, or what
Well,
do you
so
utilize with the
I
funds?
mean, it just helps them increase their down payment,
Okay.
right?
Okay.
And what's cool too is if you're a first time home buyer, CMG will match 2 to 1 up to $2,000.
Wow.
So somebody gets $1,000 into that home funded account,
Yeah.
CMG is going to pitch in $2,000
Well, that's
to
so it's
that.
a free 2 grand, so you can possibly go up to 3,000 to help you pay money that you didn't have.
Exactly.
Man, that's
Exactly.
fantastic.
Yep.
And we've been talking about a lot of first time home buyers, so let's kind of dive into that because
Hmm.
a lot of buyers out there are mostly first time home buyers.
Yeah.
And I know we were talking about this early before you came on,
Hmm.
and usually the very first question you get is, "What is the process?" So let's kind of talk about the
Sure.
process, especially with CMG. What are you telling these first time home buyers that are coming to your table and saying, "Josh, how does this work?"
Yeah, no, yeah. I mean, I love working with first time home buyers just because, it provides that opportunity to really like give that education,
Yeah.
be the guiding, um, source for them as they're buying. But, yeah, basically it's just, having that kind of initial call, kind of, I call it like the exploratory call, just to kind of go over questions that they have, concerns. Just, there's a lot of, myths out
Yeah.
there,
Right.
One of the most common one is like, "Well, I don't think I'll ever be able to buy because I gotta have 20% down." It's like, no, that's
Uh,
not the case. You
right.
can
That's a myth that's been
eh,
older than time. Yeah,
yeah,
especially in real
exactly.
estate. Right.
Exactly. So
Right.
you can, I just go over, just, the truth, the reality
Yeah.
of what their options are. Lots of times people are concerned about their credit or they don't know what their credit looks like.
Right. And I
They
and I would assume that when you're talking to these individuals, and
Mhm.
I get this on my end as a realtor too,
Yeah,
is when you start diving into someone's finances, that's when they start to kind of. It seems like they kind of put up a wall. Either they're
sure.
maybe sometimes too embarrassed to talk about it,
Right.
or they feel that maybe they don't want to make you think that they don't know enough.
Right.
But it's only in their best interest to be truthful in the whole process. I mean,
Yeah.
what did you agree with that?
Oh,
Yeah.
absolutely. Yeah. And what one of the tools that we have available to us is we're able to do a soft credit inquiry
Mm,
check as part of the qualifying process.
okay.
So I can because lots of times there's that concern of I don't want my full credit ran.
Right.
I'm a month or a couple of months out. I can do a soft credit check.
Got it.
And it's not going to hit their credit with a hard inquiry.
Okay.
And we can still if there is anything with their credit to work on, we can identify it, give them the guidance
Yeah.
with that. But it allows us to really get them a full, a pre-approval,
Okay.
even with that piece. So, we just kind of walk through that. If down payment assistance is something that's needed, we'll go over those different options.
Okay.
Um,
I'm glad you brought that up because I'll bring that up here in a
yeah,
minute.
yeah,
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 yeah.
that's a good
And
topic.
then I just go over like because that's especially for first time home buyers,
Right.
that's the most difficult thing is, having the money to come in
Yeah.
to enter into home ownership. And so I'll go over just the different options that are available, those gift funds.
Mm,
If somebody's got a 401k,
okay.
they can borrow from that 401k and any money they pay back
Right.
plus interest is back into their account.
Got it.
Right.
Right. Right.
So, there's different opinions on, some people are like, I don't want to touch my retirement. That's fine. But I just want to, I always just, you just want to provide people with all the
Right.
options.
You just want to say option one, this is take it or leave it. Hey, you have
Hmm.
option 1 through 5. What is the best case? for you in this situation.
Yep.
And then going kind of into the process, and I wanted to ask you this, is there's been a couple of times, I didn't know how frequent this situation is, but I've been in situations where we've got a deal in contract, we're moving in the deal, it's almost about to close, and to come to find out they fibbed a little bit on their application, and it had to do either with there was a student loan that they didn't kind of discuss, or not small, but a bankruptcy that they were trying to hide.
Yeah.
Is that common for first time home buyers to not really be truthful on their application?
I think for the most part, people are honest with
Okay.
the information that they're giving up front. Some of these things, like, I've had it where a judgment pops up, and it's just, and you can see, like, obviously it was something from way in the past.
Right.
It's probably in the back of their mind. May not have shown up on the credit report, but then, just through the loan approval
Right.
process, those things, can, pop up.
Right.
But no, I mean, it's just, you want to be as upfront as possible. Obviously, we're licensed
Yeah.
professionals, so we have a fiduciary duty, plus we're licensed. So if we're, all their information is private, I don't share any of that with you, the realtor.
I hope you wouldn't.
Right.
Yeah, no, I get it. Yeah.
Or anybody else outside of that.
Yeah.
It's all kept secure. Their documents are secure. Everything
Right.
is secure. So,
And I think for our viewers too, I think what they don't realize is, especially in your position, if you've got a great team behind you, a great loan officer, a great real estate agent, being up front with these maybe issues that may be there, may not be there, it's better to be up front.
right.
So that way we can solve the problems. Like you said, you're a
Yeah.
great problem solver. You solve it up front. We address it now before
Yeah.
it gets to the end. And then it may have killed the deal, or you still may be able to save it, but it's going to prolong the process, and it can
Right.
cause a whole heap of problems.
Yeah,
So,
yeah. And the other biggie too is just once you're in that mode of where you're going to be purchasing a home,
yeah.
you don't want to be taking on more debt.
No,
Right?
exactly.
You don't want to
Exactly.
be signing up for a new credit card. You don't want to be buying the new car.
Right.
You can change jobs, but definitely talk about it with us beforehand, just
No,
to make sure there's no hiccups, kind of a thing. Because that's another kind of myth, is that I have to be on my job for 2 years or else I'm not going to qualify for a home.
Right.
That's not true. You can, as long as you've got a 2-year work history,
Right.
you don't have to be on that same job for 2 years.
Well, what's the well, let's kind of go a little deeper, dive into that, 'cause that's
Yeah.
great. Is it your 2 years you've been working, but what if it's fractured? Every 3 months you've changed your jobs. Is there some type of limit, type of cap to that kind of situation?
No, I mean, it's a case by case. If there's not a gap in between,
Okay.
each of those job changes, then it's okay. But if there's, if we start seeing that there's gaps, that could be problematic.
Okay.
Because then it just shows some job instability.
Okay.
Right?
Some yeah
Yeah.
inconsistencies. Okay.
But yeah.
Great. Now, just again, just kind of rolling into the first time home buyer arena here.
Yeah.
What is really a first time home buyer? Because
Yeah.
me and you were talking before we even started this episode today, that first time home buyers, they think, or they associate themselves with the loan FHA, and we hear that a lot.
Right.
And they think it's either like a Federal Housing Administration, of like first time home buyer application or something like that.
Right.
What is a first time home buyer really?
Yeah. So definition of first time home buyer it's very simple, actually. You've not owned real estate in the last 3 years.
Okay.
That's it.
Okay.
And FHA has nothing to do with having to be a first time home buyer.
Got it.
It's
Okay.
it's a federal agency that actually provides the funding loan availability for FHA loans.
So just to be clear, there is no loan that's specific for first time home buyers.
No.
Okay.
There is not.
Right.
Yeah.
Okay.
And a lot of first time home buyers will use a conventional loan, right? And
Okay.
you can go as low as 3% down on
Right.
a conventional loan. FHA, what's nice with FHA is whether you're a first time home buyer or not, you can go as low as 3.5% down. Right.
And I think it's great for our viewers out there, is we're going to do more segments together,
Mhm.
and we'll probably get more in depth at just maybe segregating a conversation just on conventional,
Yeah.
just on FHA.
Right.
But just, you mentioned it before, can you just give a quick little difference between conventional and FHA? Because in
Yeah.
one instance, you know FHA is a certain down payment,
Hmm.
and then for conventional, there's a certain. But let's just give a quick little cap on that.
Yeah.
Yeah.
Generally speaking, FHA tends to be a good fit for if the credit isn't, if someone's credit isn't excellent. And when
Okay.
I say excellent, generally under 720 or under 700,
Okay.
and they have less to put down. Because when you compare that to a conventional loan is going to come with a higher rate in that situation,
Got
right?
it.
Whereas FHA will have a lower rate, and then the mortgage insurance will be less. So
Okay.
anytime you're putting less than 20% down, you're going to have some form of mortgage insurance.
Right.
Conventional, it tends to be a good fit for credit that's above that 720 and higher. That's not a hard rule,
Okay.
right? There's some, other things that we look at, but generally speaking, the rate and the mortgage insurance will allow them to have a lower payment with
Got it.
conventional
Okay.
when the credit is in a good shape. But yeah, and FHA kind of has some more flexible guidelines to
Okay.
it as well. So if we're pushing the upper thresholds of their debt
Got it.
relative to their income, it can go a little bit higher. So again, it's just, and I mean, that's our job as a loan officer, is to understand each person's circumstances
Right.
and then look at which one of these programs is going to be the
Which goes
best.
to what you said earlier, right? They have to have options, right? You
Yeah.
got to know what your options are. You're gonna have
Hmm.
someone in your corner to explain those options.
Yep. Yep.
Now, we were talking earlier. Again, we talked a lot before we got on here. Um, I know you said first-time home buyers. You haven't owned real estate in the last year, but it seems like there might be a loophole if you already own that property. Let's say for a couple years you lived in there,
Mhm.
and that's your primary, but yet you want to go purchase another home as your
Right.
new primary.
Right.
What is that situation like? Are they still considered a first-time home buyer? Do they have to put 20% down? Kinda walk us through that situation.
Yeah. Yeah. So, and that's actually pretty common right now. Current homeowners that have a really good low interest rate on their home that they got a few years back, they don't want to sell that. They can make some money off turning it into a rental.
Yeah,
They won't be considered a first time home buyer, so they can't get down payment assistance, traditionally speaking.
okay.
Um, but they can go as low as 5% down.
Wow. So let's say, to clear this up, their home that they currently have as a primary,
Hmm.
they use conventional, let's just keep it clear
Yep.
across the board. They put 5% down. They lived in there for a couple years. They're buying a new home
Yep.
as their primary. They can still only have to put
5%
up to
down.
5%
Yeah.
down.
And then all we have to have is a rental agreement
Okay.
for the home that they're leaving. And we're able to use um, most of that rent to
Wow.
offset any existing payment that
So
they have.
essentially, they were able to the first home becomes an investment home now,
Right.
and they didn't have to put 20% down, which
Correct.
would typically be the case if you
Right.
were to live in your primary
Hmm.
and then buy another home.
Yep.
So again, that's a cool loophole. Again, that's why you gotta have
Yeah.
people like you in their
Hmm.
corner.
Yep.
So moving forward, we talked about FHA. You mentioned down payment assistance, which is really part of I think the first time home buyer arena as well, kind of the
Right.
thought process. What is down payment assistance really?
Yeah. So in most cases, down payment assistance is providing for the at least the minimum down. Now, a
Okay.
person can come in with some of their own money to put down, but it's providing for that minimum down, 3 or 3.5%. Um, it's for most of the programs that money does get paid back later, but it
Okay.
doesn't have to be paid back until they sell the home.
So there are
Right.
multiple programs within down payment assistance. It's not one specific program.
Correct.
There are multiple across
Yeah.
the
So
board.
like
Okay.
California has like a statewide down payment
Okay.
assistance. It's the most common one used, the California Housing Finance Agency,
Okay.
Cal HAFA, Cal
Mm,
HFA.
right.
Um, but we have other down payment assistance within CMG programs that we have available
Okay.
as well. I would say the most commonly utilized is that
Yeah, okay.
California Housing.
And I know we're gonna talk about the dream for all
Hmm.
because if anybody that's in the realm of buying a house right now or even heard about down payment assistance, that seems to be the top of the line or on top of people's mind right now. But
Right.
before I get into that,
Hmm.
what are you seeing on average someone using down payment assistance, and how much money on average is being covered with the average program that you're utilizing within CMG?
Yeah, for the down payment assistance, it cuts down from in just most cases having to come in with 20,000 or more, it cuts it down to, in a lot of cases, 5,000.
Wow.
Yeah.
So it could be more than half in
Oh
in
yeah.
situations with down payment
Yeah.
assistance.
Definitely.
Now, um,
There are some options to provide additional
okay,
assistance for closing costs.
right,
Um, those aren't very attractive right now
okay,
in terms of the interest rate that comes with it.
got it.
Much higher.
So there are positive, but
Yeah,
there could be some negatives. So that's
definitely.
one of the
That
problems.
would be, basically the more assistance you're getting, the less out of pocket up front, the more assistance, it's going to cost more to the
So
buyer.
to kind of simplify that, basically in the government's eyes,
Mhm.
you're considered more of a risk. I would assume you're more of a you have a higher risk assessment of less
Yeah,
money you've put down, so
right.
therefore you're having a higher rate. That's kind
Correct.
of how we kind of think about that.
Right. Yeah.
Okay,
The least skin in the game that
right.
you have,
Okay,
it's higher risk.
got
Yeah.
it. Okay. Now,
Simply put.
appreciate that.
Yeah.
So down payment assistance. What type of person qualifies for that? Because I think when people think of
Hmm.
down payment assistance, a lot of people are like, I don't need that. I've had some clients that tell, I don't need down payment assistance. I'm not in a need.
Hmm.
Well, that's not the case. I think you should take whatever you can, especially if it's free money. But who is it designed for? You know?
I mean, it's really designed for the first time home buyer,
Okay.
generally
Okay.
speaking. Um, it you know Credit doesn't have to be perfect. It can be down into the 600s.
Wow.
640 is going to be the minimum using FHA and down payment assistance. Um, and I mean, there are income limits,
Okay.
so maximums. Yeah, but I mean, for like our area here, Sacramento, Placer, Yolo, um, a household can make up to $200,000 and still get down payment assistance.
So I think that's what
At least with the California Housing Finance
right. And
Agency.
I think that's what I kind of want the viewers to understand
Hmm.
that, right? That's not an average income, 200,000 combined,
Right,
and you're still qualifying for down payment assistance.
right, right.
And do you have to be a first time home buyer to use some of these programs, or is it just for first time home buyers?
For the majority, it is first time home buyers. Um, but we do have other down payment assistance options
Okay,
to
right.
where you don't have to be a first time home buyer and there's not the caps on the income.
Wow. Okay.
So there are those options that do
And
exist.
maybe we'll get deeper into that on a later
Hmm.
episode. Let me
Yep.
move forward on this. Last thing about down payment assistance, though. Again, the dream for all, like I just said
Yep.
earlier, it's on top of people's mind.
Hmm.
I don't know much about it because I'm not in your realm there.
Yeah.
I heard there's a lottery behind it. Some may
Right.
qualify. So walk us through the Dream for All program.
Yeah. So the Dream for All, it launched a year ago. The money went in like 10 days. So the California Housing Finance Agency, who's administering the Dream for All down payment assistance, they made quite a few changes to it this year. Um, so
Hopefully,
they're
more money this time. No.
it's not more, but it's close to what
Okay.
was available last year. There's a registration which is actually open right now, April 3rd through the 29th. So we're actively registering people for the program. We get them pre-approved, then they fill out the registration through the Cal HFA's website.
Okay.
It is geared, at least one of the buyers has to be a first-time home buyer, and how they're defining first-time home buyer is that the person is not owned within the last 7 years. So they go further from the 3 year,
Okay.
right? So at least one of the buyers has to have not owned within the last 7 years. They've also added this piece of first generation home buyer.
I've heard. Okay. Yeah.
Yeah.
Walk me through it. I've heard about that.
So that's where they cannot have owned within the last 7 years. And then their parents cannot currently own.
But they could have owned in the past.
They could have owned in the past. They just can't own currently.
Now.
Yeah.
Okay.
If their parents are deceased, they cannot, the parents could not have owned at the time of their passing.
Oh, got it.
Yeah.
Got it. Okay.
Yeah.
Okay.
So,
So if they have an unfortunate event and their
Mhm.
parents died, that doesn't wipe the slate clean and requalify. So if they died when they now, both of them would have to have owned. What if it was their father died 20 years ago? Again, I'm just giving you hypotheticals
yeah.
as a first time home buyer. My dad died 20 years ago, but my mom passed away. Do I still qualify? I'm just
So the way that it's written is that parents cannot currently own or could not have owned at the time of death. So
So if it's just one parent still alive and they
yeah,
own, then it kind of just
they're
okay.
looking at that as
All right.
you're not a first generation home buyer.
But it
under
seems that most of this is a positive. What is the big takeaway from this Dream for All that's different from other down payment assistance programs?
So it's providing with significantly more down payment assistance. So they'll be able to get up to 20% of the
Wow.
purchase price. They're capping it at $150,000. So 20% or a max of 150,000, which from a purchase price,
Right.
750,000, 20% of that would be 150,000 in assistance.
And to kind of give some comparison, usually when I have a buyer with me asking how much money do I need to have, I always say calculate at least 6% of the purchase price. That will cover
Mm,
usually your down payment, your closing costs, and
right.
some external factors that we may not see. This is 20%. This
Right.
is a
And
huge jump, like you
it's
said.
a lot. Yeah. So, I mean, someone can put that all towards their down payment and then there's no mortgage insurance at all. So then they're going to
Wow.
come in with some money for their closing costs,
Right.
or that 20% can be used to cover their down payment and their closing costs. And they're coming in with zero, nothing.
Okay.
Right.
How long do you have to? Because I know the last time they had the Dream for All, there was
Mhm.
some stipulations. You had to stay in the house for X amount. The government was on a second lien. They would get some of your property. What
That's
kind of caveats are with this?
yeah, that's still applicable. I mean, the assistance does have to be paid back.
Okay.
It also has a shared appreciation component
Okay.
to it. So the simplest way to explain that is, let's say a buyer gains $100,000 in equity
Okay.
and they're going to sell, let's say 5 years, they've gained 100,000. They'll pay back the original down payment assistance plus 20% of that
Got it.
100,000. So they'd be paying back 20,000 along with the original down payment.
Now that I can see that kind of viewed in a couple of different ways, right? Some people say, "Why would I want to give up my equity?
Correct.
Right? Why do
Yep.
and I got to pay this back?"
Mm-hmm.
But the other side of me that's been in the industry that understands finances much better now
Mm-hmm.
as an older man is I came in with nothing. I
Correct.
didn't have to put in $1 of my own money.
Right.
I got the appreciation for free. I got the money down for free.
Right.
All I had to do was live my life in this house, pay my bills, and I got to pay it back with nothing I brought in, right? I mean,
Yeah.
that seems pretty
That's
fantastic.
how, I
Yeah.
mean, that's how I look at it. But, each person is different. And ultimately, it's, each person's money, their investment, you know what I mean? But
Right.
I just think in terms of like opening up the door to home ownership for a lot of people, especially, I mean, the market's pretty strong, right?
Right.
So, you can increase that price point that people can purchase and actually find the type of home that
Right.
they want to make their first home. And it just, it opens up more possibilities.
No, that's awesome.
Or-
So if they're out there, if you guys are out there again, Dream for All program, fantastic program. We'll have our things on our Instagram and our Facebook and our YouTube on the link that goes down there to qualify for this program. We'll
Mhm.
have Josh Howard's information down there. Reach out to him and we can all discuss if you qualify for this fantastic program. But moving forward, and thank you for the download again.
Yeah.
We'll have more episodes on
Yep.
that.
Mhm.
Let's just kind of go into the rates because that's what's kind of making this market a little funky. And that's just how I
Right.
kind of, wild,
Sure.
wild west
Sure.
feel. We don't know what's going on.
Right.
Where are the rates right now?
Yeah. So generally speaking, and again, there's no one rate, right?
Right.
And it doesn't matter who the lender or the bank or who is. There's no one rate, right?
Right.
But generally speaking, your conventional loans, you're going to be in those high sixes right now. An FHA, VA loan, it's going to be a little bit less,
Okay.
right? But with FHA, what you got to remember, and that's a very common question, is like, well, the rates are lower on FHA, and I'm like, okay, they are lower, but you're paying more in mortgage insurance, right? Which we can talk about more on a, another episode, or we can dive into it, on a follow up question here. But yeah, so generally speaking, the mid to high sixes. Again, it just depends on each person's. Some people could be up in the sevens just based on where their credit is, the amount of money they're putting down, the type of property.
Okay.
Definitely investment.
Right.
Investment homes are going to come with a higher interest rate.
Right. And I know there's a lot of variables that determine
Yeah.
what gives you your monthly mortgage, but Is
Mhm.
it safe to say that the rate is really the central piece of what's kinda gonna determine how your monthly mortgage is gonna flow, whether up or down?
Oh, sure.
Okay, okay, yeah,
Yeah, yeah, and I mean, that's the number one, piece, and really when someone's thinking about, well, what's the rate? Really what there is, what's my monthly payment gonna
right,
be,
what am I
right?
gonna pay per month?
Right.
And it's funny you
Yeah.
bring that up because people will say, I don't wanna buy a house bigger than 500,000 or let's say whatever, just a magical
Uh-huh.
number, but I always do that follow-up question, "But what do you wanna pay per month?" It's not about the
Right.
prices, where do you want and they go, "Yeah, you're right, what do I wanna pay?" And it comes down to that rate.
Exactly, yeah, and so there's, with that, it's and this is where kinda like, I I don't do the same kinda engineering that I used to in my first career,
Yeah.
but now I'm engineering ways to get that payment as low as possible for people.
You're an engineer for finance, you're re-engineering for finances is what you are, yeah.
Yeah, yeah, and really with just, the affordability piece and that kinda thing, um, there's and these tools have always been available, but
Yeah,
it's like, okay, how can we use, like, a permanent rate buy down?
right,
Okay. So, you ask a seller for a credit or something like that, or the person uses their own money, get a lower interest rate, lower payment. Um, Mortgage insurance.
right,
Okay. So, anytime you're putting less than 20% down, there's going to be some form of mortgage insurance. It's traditionally always been okay with conventional loans, you're going to have mortgage insurance part of your monthly payment.
got it.
Well, we can look at it's called a single premium upfront mortgage insurance premium, and it's just charged up front, and we can finance that in with your loan. So it's spread over 30 years. Payment will be much lower in most
So they're
cases.
not putting in extra cash for that premium insurance, that
Hmm.
PMI that you usually pay, not out
Right,
of pocket, you're building it into the loan,
right.
and then therefore lowers your monthly mortgage.
Yeah,
So no money out of your pocket,
right.
lowering your monthly mortgage if you were to take that other option that you would give that maybe other loan officers are not giving, right? That's what you're
Right, right. And, again, it's just about providing the options to people,
right,
right? It's like, okay, here's what it'd be if it was monthly. Here's what it'd be if it's a single upfront. And
okay,
I'm just finding that it's just the affordability is the biggest challenge right now.
right,
So giving that option of here's how we can get your payment as low as possible. But then also reminding them that like, hey, we see rates drop in a year, 2 years, whatever it is. We don't have a crystal ball. We don't know. I mean, it could be next month,
right,
6 months,
right,
but we've got that rate rebound, that piece of where you're going to be able to take advantage. You're buying now, take
right,
advantage when rates do drop, lower your payment. Right.
right.
So, and also, um, we have free float down
Wow,
on
okay,
their rate. So they get into contract, and let's say a week later, rates drop
right.
noticeably, we can float that rate down for them and it doesn't cost them it.
So based on kind of the conversation we had in the last like 10, there's a lot of things to unfold. A lot of things that I've taken from this conversation is
Mhm.
a first time home buyer can come in and use down payment assistance, right? And hypothetically, if they get in Dream for All, not only will they come down with nothing, but have equity or almost pretty much built in,
Right,
build on appreciation, not pay that back.
right.
They have the ability to refinance with your program and
Yes.
not having to pay anything back. So therefore, sometimes if you're doing with somebody else, building on that
It's gonna be a
principle.
cost, yeah.
Then you have the ability to wipe out that PMI with no money coming out
Mhm.
of your pocket to lower your monthly mortgage. And then we can also talk to other sellers to help them buy the rate down. So
Right.
it's pretty plausible and not too far fetched to say that someone can come in with bare minimum,
Yeah,
have the
it's
lowest monthly
possible.
mortgage possible,
Yep,
just depending on their situation. And then
absolutely.
that's why we need something like someone like you in their corner
Mhm.
to re-engineer their finances. Hey, look, Nick, we can do X amount that you've watched on YouTube, or we can
Right.
do this way.
Yeah.
No, I love it. I
Yep,
love it.
yep.
Now, kind of staying into pre-approval. I think this was a good topic here. Old pre-approvals, right? We're dealing with
Mm,
rates, all right. So we've had,
yes.
let's say, one of our viewers just got a pre-approval 2, 3 months ago, and they were quoted a rate. Why do they need to recheck back in?
Yeah, and I mean, this is gonna be coming up a lot right
Okay,
now, because, yeah, late December, January, we saw a pretty good drop in rates. Um, but I would say from January to now, they've increased about a percentage,
Oh,
roughly speaking. Maybe
okay.
not quite that much, but so if someone is working off of a pre-approval and a set of numbers and quote that they got January, February, even a month ago,
Yeah.
they need to check back in or get an updated pre-approval,
Right.
right, to make sure they're getting the best deal,
Right.
obviously.
As
But
long as their credit stayed intact and everything stayed the same.
yeah, yeah. But
The ra
they
yeah.
should, but somewhat, it's very important because you may think that, okay, I can go up to 600,000, let's say, and this is
Right.
about what my payment would be. But if you got an offer accepted today, um, it's going to look different.
Right.
It
Right.
just is because there's been some movement with rates. There's a lot of headlines about it. So it's a lot of information that can really get confusing for people and
Yeah.
everything. But the big bottom line is that inflation, which we all know
Right. And
and
they're still
feel,
tackling it. They're still trying to
it's
figure it
it's
out.
it's
Yeah.
not making the progress in terms of coming down
Right.
as quickly as they want it. So that's what's keeping the rates
And it's funny because
elevated.
you go on YouTube and they've been saying this for the last year. Rates are gonna go drop back down. We're gonna go back to
Yeah,
2.5%. And it just keeps going up. And the Fed
yeah,
keeps saying, nah, we're not gonna lower it.
not gonna,
Even
yeah.
now I've read some articles that looks
It's
like
probably gonna,
2024, they might not even lower it at all.
yeah.
There,
This
yeah.
the projection is still to see at least two rate cuts.
Okay.
But this summer is most likely off the table now.
Right.
They're saying September is the likely
But initially they said one was gonna be in the summer, right?
June.
June, which
Yeah.
again they said no
But
now.
yeah,
So
the
that's what I'm saying.
data
So
the
yeah,
data coming out squashed that possibility. So we just have to see
play it by
what's
ear.
going to happen. I mean, I mean, if you look at like these economic cycles over time and everything, it's
Yeah.
like there's eventually like a kind of a breaking point at which just all the different economic pressures and factors
Yeah.
will uh, put the Fed in a place to cut those
Okay.
rates, right? So as soon as and so here's a really without getting too much into the weeds of how rates and all that stuff, but with mortgage rates, it's real time data that determines mortgage rates, right? And
Mm.
that data is what's informing the Fed of what they're going to do months out.
Oh,
So what the Fed does in September doesn't have an actual direct um, tie to mortgage rates. Mortgage
oh,
rates
okay.
have already adjusted to the data months in advance.
Right.
So as soon as we start to see that those inflation numbers come down, or the Fed says, "Hey, we're seeing positive signs,"
And this is before they even make the big announcement. You're already
mortgage rates will react to that
wow.
instantly.
So then we're not
Yeah,
gonna come to September, and then what's Powell, right? It's his last name is what's his
Jerome Powell.
Jerome Powell
Yeah,
gets
I call
on.
him J Powell.
J Powell, okay, JP.
JP. Yeah,
He gets on
exactly.
September. You guys are already ahead.
Way ahead
It's
of it.
not gonna be. He's gonna make an
Yeah,
announcement. All of a sudden, you're
yeah.
gonna call into your LO and say, "Hey, man, they just made the announcement. Rates are dropping." Like, hey, we
Which
already
we get that all the
okay,
time.
okay,
We get that all the time, and I get it. Just but it's like, yeah, rates have already adjusted.
yeah,
They've already done what they're going to do, and you know, it's an election year, so presidential election year, and that'll be in November. This fall could be very interesting in terms of like what
mm,
happens with rates and everything,
right,
because now if they're projecting September to be
yeah,
Fed rate cut,
and
that's
then
2 months ahead of the election.
right.
I you
It
know
could go either way.
It can go either
You're
way,
right. Yeah,
but
it's gonna be a
you know,
weird
I
kind of
would say though, because it comes up a lot. The rates are too high, which
right.
is really like I think my payment's going to be too high. That's what the
Yeah,
real thinking is. Um, and it's like okay, understood, right? But everyone else having that thinking out there that's kind of like staying on the fence, rates come down, right? So we're looking in the future, rates come down.
right.
Okay, now I'm going to get in.
And then it's gonna
So
be
now
a
you've increased the number of buyers,
yep.
prices are going to go up.
Yeah, it's gonna be a feeding frenzy.
Yeah, so now you're going to be trying to compete with like 10, 15 other buyers. You're going to be paying 20, 30, 40, $50,000 over
Okay.
asking.
Yep.
So, okay, yeah, you got a lower rate, but you paid much more for the home,
Right.
right? Um, are you ahead of where you would have been if you just bought now? Then took advantage of the refinance, that's not going to cost you anything.
Right. I was just,
Lower your
yep.
payment. So I had that conversation a lot with buyers, and when you kind of look at it, and that's how economics work.
Yeah. No,
Supply demand.
you got to kind of foresee things. You got to have people in a corner to
Hmm.
to kind of shadow things that were blind to you. But you have to enlighten them on certain things. But I understand. So if I don't own a home and I'm hoping rates are going to drop, well, we don't know,
Yeah.
right? It just
Right.
keeps going up. I buy now at a certain rate. If it goes higher, I beat it. If it goes lower than what I have now, and then
I'm going to take
refinance it,
advantage of it.
taking advantage
Yeah.
without having to be in the buying frenzy, without having
Right.
to have, outbeat 6 or 7 offers,
Yeah.
which we're already kind of getting,
Yeah.
multiple offers now. So I can only
And that's
imagine.
and that's what's really interesting to me, and I think anyone in the business, is that, like, man, even like with rates near 7%, the market is very strong, multiple offers in a lot of cases. So it's like, if the market is strong now,
How is it? Yeah, it's going to be extra strong.
it's just going to be, yeah,
Yeah.
yeah. So I mean, it's just, and I always, somebody buys now, 5, 10 years from now, are they going to look back and be like, oh my gosh, I can't believe I bought this home at this and at that rate? No, they're going to be like, man, I've got, most likely,
Right.
no guarantee, but most likely, a couple 100,000
Inequity.
in
Yeah.
equity.
Right.
I've created this like generational wealth that's
Right.
gonna, you know what I
No,
mean? Like,
absolutely. So,
so
yeah,
people, I just, you're not gonna look back, and I mean, we can attest to that as being
right.
buyers in real estate ourselves.
Yeah.
Like,
And I bought in all markets, so yeah, so
my
I
first home that my wife and I bought was in the end of '07.
Oh, so
The worst timing,
you
right?
bought right before
Yeah.
the crash.
Yeah, yeah, it was like kind of right
Oh,
as,
right, right,
yeah.
yeah,
So I
right.
mean, we bought like a new home, new
Okay.
build, so they were already like slashing prices. They already knew what was coming.
Right.
We thought we were getting a great deal,
Yeah.
but it's, so that ended up being not a great time to buy. But um, you know, over time, that was, gosh, how many years ago now?
Right. So
15,
you were in the
16 years ago.
worst situation, got out of that still and
Still got
still.
out of that. We bought a subsequent home after that, gained the equity,
Wow.
right? And
Yeah.
so it's just, and I mean, that's kind of how California real estate is,
No, that's true.
right?
That's true. But you
And
just gotta have, like you said, good people in their corner to help you
right,
with the risk assessments,
exactly,
you know?
exactly.
No, I appreciate
Hmm.
that, and this is the last question, of the day 'cause I really appreciate you being here.
Yeah.
But I talk about sometimes just with buyers, and I want you to kinda address this, is they say, "Well, I'm gonna go to Wells Fargo or I'm gonna go to Bank of America," and, what's the difference between those depository banks
Hmm.
and a mortgage banker?
Right.
What's the difference? 'Cause, I explain this to people, but I want them to hear it from you,
Yeah.
what that looks like.
Yeah. I mean, there's really multiple differences, several different. As a mortgage banker, all we do is home loans,
Right.
right? And we have our, your traditional loan options, which is really mostly what the banks or credit unions are going
Right.
to offer. But we also have, like, we have 60 wholesale broker sources
Mm.
available to us, right?
Wow.
So we're
Okay.
able to look at the different options, right? Um, we're, I'd say we're just, we're able to advocate more in
Okay.
terms of just options. Um, we work evenings, weekends,
Got it.
right? So
Okay.
we're available.
Got it.
And then we get someone pre-approved,
Yeah.
right? We can close that loan in 15 days. Easy.
Yeah, 'cause
Whereas a bank or credit union, they're going to tell you 30 to 45 days.
30, 45 days, I work Monday through Friday,
Right.
9 to 5. Is there more regulations, or how should I say, is there less flexibility to get someone approved through a depository bank? Because they're actually, it's like a big bank, they're using savings, they use other people's money. Are there more regulations on top
Um,
of that versus a mortgage
I mean,
banker?
so there's really not, there's not like a compliance
Okay.
regulation piece. But what I will say is it's a, it's kind of a, it's a myth that banks are just lending out their own money.
Right,
They
right.
they do on some loan products,
Okay.
but those are kind of more niche
Mm,
type products.
okay.
If they're doing a conventional loan, an FHA,
Right.
it's going to the same place that
Okay.
all the mortgage bankers are. So they're not in a position to offer them a better deal,
Got it. Got it.
because they're it's it's all going to the same, source in
Okay.
terms of like ultimately who the entity that's backing the loan.
Awesome. Okay.
So yeah, so really it's just about more options, speed,
Yeah.
availability, communication, all those things.
Right. Because
So
first time home buyers, they got a billion questions.
yeah,
And it's
and
not, and
it's
they're working
and it's
throughout the
pretty
day. Yeah.
and it's pretty common to hear it. It's like, "Oh, I'm going to go to my credit union," and that's like understood, but you're not buying a car.
Right. Right. Exactly.
And I get it, credit unions, like, they have fantastic rates, and
Right.
but it's like you're buying a home.
Right, and I
It's a
can't harp on
big
this.
deal.
You're right, and I can't harp on this enough is communication.
Yeah.
You've got a million questions, especially if you haven't been through the
Mhm.
process. What's going on with this, and how do I explain this?
Right.
And again, most people are not gonna be asking those questions because 'cause they're working
Right.
Monday through Friday, and they're getting off around 4 or 5 o'clock, and then
Yeah.
questions are gonna be filled after they get off work, which
Yeah.
therefore, if they're working with one of these big institutional banks,
Yeah.
you're gonna have to
And if
wait
you
until you
wanna
can
meet
catch them
them in
tomorrow. Yeah,
person, you gotta go to the bank, it's like, we're gonna meet you wherever is,
right,
you know what I mean?
right.
So, it's just a much more, I guess, I think personal, um, yeah, but it's not costing them more.
Okay,
I
okay.
mean, we'll compete and beat any of the banks that are
But
out there. So,
But as
just
they
saying.
say, an old saying, time is money, right? Let's say
Right.
you try to get in this deal, and then all of a sudden you get into this process, and 30 days go by because you can't get a hold of your banker as
Right.
good,
Right.
and then you just wasted 30 days of market, and then the rates go up again,
Yeah.
right? So
Yeah.
yeah, it could be definitely a disadvantage to the individual.
Mhm.
But that's all the questions I have for today, Josh. Hey, look, I appreciate your time. It was
Absolutely.
awesome hearing
It was
from
a
you.
joy.
And then to our guests out there, you guys will recognize Josh or his other co-partner Cherokee Moore, who you guys will see on here as well. And we're gonna be doing this with them at least once a week to understand different loans, rates, where the market's at, and if they got something cool coming up with
Mhm.
CMG and their incentives, we'll be on here together to discuss that. Or sometimes they'll just be on here by themselves, giving our viewers a view of what's to come. So we appreciate you guys viewing to episode number 2. Your host Nick Orlando with the Nick Alonzo Real Estate Group. Thanks again, Josh. Appreciate it.
Thank you.